Hi, I'm Kerry. I'm the host of Best of Us Investors. The other night I had a visit from heaven. It was from God's Department of Investments. And they declared to me that you've been in investing too long and you're taking up too much of your time. Kerry, you're only allowed to invest in 6 stocks. And you need to choose those 6 stocks and sell everything and then just invest back in the 6 stocks that we're going to limit you to. Well, I woke up and I realized it was a dream, but I thought that should be an interesting video. A visit from God's investment department. Yeah, they have different departments up there. And you could only invest in 6 stocks. So what I decided to do was decide what those 6 stocks were and then put together a video on it and why, which stocks I wanted to buy and why I wanted to buy each one and what I thought their future was going to be. And then I was going to ask our investment committee. We have an investment committee as part of Best of Us Investors, and it's made of 4 people. And they dig deep into the numbers of how a company is doing, and then they each share their opinion as to whether that's a good buy or not, irrelevant of what Kerry says, because they don't see my video and I don't see their video until they're published. Actually, I see them about 48 hours before, as does the rest of the members of the tribe. So what I'm going to do is I'm going to share those 6 stocks with you over the next 6 weeks. And so we're going to start with today's stock on Thursday, and I'm going to release my video at 7 in the morning, and the investment committee will release their video on the same stock at, I believe it's 3 o'clock in the afternoon. You can find it. So what is my first stock? If I, again, can only own 6 stocks, the first stock that I would own is Amazon, Amazon.com. And what I think is interesting in my choice is I've owned Amazon for quite a long time. It's a major part of my portfolio, but I would buy it for very different reasons than when I first bought it. And I think the different reasons is pretty reflective of where the stock is, where I think the stock is going in the future. And that's basically how I invest. I don't worry about what somebody's doing today. Today, to me, is old news. What I want to know is what are they doing in the future, and where is that going to play in the betterment of my life? Amazon right now had total revenues last year of $113 billion, up 27%. That's probably pretty good relative to the fact that last year they had a big surge from the pandemic. And then when I first bought it, it was all about e-commerce, and then I learned about Amazon Web Services and how they dominate the web service business. In fact, are where other people such as Google and Microsoft don't make money on it, they do, and so they're the masters of it. In fact, let's see. The new CEO of Amazon made the statement recently that 96% of the $3 trillion associated with spending on IT is not being spent in the cloud. Only 4% is spent. So that gave me a gauge on their growth potential. But again, that's not why. That's part of why, but there are other reasons why Amazon would be one of my, if I could only have 6 holdings, one of them. I'll go into that in more depth after I explain to you that I'm not your financial advisor. I'm a retired financial advisor. But while we're doing that, and you've probably seen it before, give me a thumbs up, a like, and I'm trying to rebuild my channel for people who want to invest in the future. That's basically it. I don't invest on what's happening today and how the market's reacting to what's happening today. I invest in those companies that are going to change the way I live, and I think Amazon even has more change in front of me. Talk to you in a second.
Best of Us Investors presents Carrie Griegmeyer.
Okay, as I said, Amazon is growing, continuing to grow. And it's growing in great part to Amazon Web Services, their data collection source. And you need to read the Everything Store. It's not written by Jeff Bezos, but it gives you a very good background on understanding how Amazon has evolved, and gives you some idea as to where they're going. Much to my surprise, in 2012, web services were $1.5 billion. 2018, it had grown to $25 billion, and then in the next 2 years, it grew from $25 to $45 billion, representing 12.5% of Amazon's overall business, but representing 65% of their profits. And it's got a much higher markup and profit margins than does the services. I track my stocks, particularly my big six, on a graph. And I want to show you that graph here and put it in relationship to other stocks that I think are disruptors in technology and where Amazon is relative to them. And then I want to talk to you about where I think they're going and why I think even at the price of, what is it, 3,000, what is Amazon? $3,478.05. Even at that price, I think it's a good investment. I think it's undervalued, even with a PE ratio of 60. But look at this chart for a second. Okay, this is my chart, and I'm looking at Tesla, Google, Apple, Microsoft, Amazon, and Facebook. And I think what leaps out to you immediately here is the path of Tesla, and how since roughly January of 2020, it's up some 712%, really. And then everybody else is down here. The closest to it is Google's up 107%. But then as I move the chart forward and go to January of 2021, look how things change. Now our leader of Tesla since the January of 2021 is up 10%, where it was up 700% if we go back to 2020. Google's up 66.9. But what really surprised me was Amazon down here up 9%. I think if I get it even closer to January there, yeah, it's actually closer to 4%. So, and at the same time, Google's up 65, Facebook's up 37, Microsoft's up 35, Apple up 16, and Tesla's actually down 4%. So I look at that and say, what is different here when I go and see back here when they're all basically on the same path? What has changed? Why is Google outperforming all of them, and why is Amazon underperforming? And I think it comes down to the hype that's built around them, the new things that they're introducing. So let's go back to the office and talk about where I think Amazon is going in the future. Amazon grew, much to everybody's surprise, from the e-commerce business they were doing. And I don't think most people even, except maybe the very astute investors, knew what was really driving the growth and the profitability of Amazon, and that was Amazon Web Services. And I don't think most people have a good handle on what exactly that is going to mean in the future. And I think, as I see it, from reading some books, particularly the book The Future is Faster Than You Think, which you can find a link to in the description, they talk about, in the future, I'm going to have an avatar. And that avatar will be a digital representation of me, and that avatar will grant usage of all my data to all the data keepers, and that will be Amazon, Microsoft, Google for the most part, and then some of Apple. I don't have an Apple phone or computer, so they don't have that much of my data. And I will grant them access to all my data through my avatar. Then all other data, pertinent data to me and my life and my likes and dislikes, will be given to that avatar. Well, the largest holder of that data is Amazon. And they are the best at managing it. They are the best at introducing artificial intelligence to that data. So to give you an example, what I think that is going to mean in the future is I buy Crest toothpaste. I buy Crest toothpaste because I've bought it for years and because Colgate toothpaste makes the skin in my mouth peel out. So I buy Colgate toothpaste. Is it the best toothpaste for my body, for the enamel on my teeth? I have no idea because I have not gone and I have not had the capability of matching the chemical makeup of my teeth to the chemical makeup of any and every toothpaste. And even if I did, I wouldn't know what I was looking at to make a decision. But in the future, my data, my medical data, will be matched with the data of the toothpastes, and my avatar, through artificial intelligence and machine learning, will buy the proper toothpaste for me. They'll buy the proper shampoo for my hair because they'll know my hair chemically and not just my hair. And they'll know the same chemical makeups of any and every shampoo. So there will be I will make no purchases. My avatar will, and it will all be driven by artificial intelligence, and that will be driven by who owns the data. Who owns the most data? Amazon Web Services. So that, and where do they get that? Because they provide the framework for all the apps that you have to run. In exchange, they then get that data for all the apps that you run on your phone or on your computer or whatever. So that's one of the reasons I own Amazon and would be one of my 6 stocks to own Amazon. Then I just recently read an article about Amazon and their efforts to get into renewable energy. And they have made a pledge that they will go to a 0 carbon footprint in the next couple of years. Now, and that's a good thing because by doing that, they will save money, which will make them more profitable. But what's even more important to me is I'm learning that they are going into partnerships with other companies, such as Plug Power, the companies that plug your cars into in the future. And they're doing that, I'm sure, to provide plugging sources for the many vans that they're going to have running around cities delivering packages, so they'll bring their costs down there. They're partnering with Rivian, RIVIAN, an electric vehicle company, and then they're working with Leon Electrics. They're an electric truck company. So, and I wouldn't be at all surprised to see Amazon actually buys some of these companies down in the future. So I see a company who isn't just sitting back and who is generating enormous amounts of free cash flow that they have to do something with. And so my question is, what are they going to do with that money? Acquire other companies? That's a good thing. That continues to push disruption in the future. That's a good thing. And so they're going to keep themselves ahead of the game. And that's who I want to invest in. Now, the other thing that I think is interesting is Amazon can be a volatile stock. What was I reading? That if I had bought it in, I know what I was talking about or thinking about. I believe Amazon is about to split. And so I went back and I did some research, and I saw that between 1998 and 1999, Amazon split 3 times. In 1998, they did a 2-for-1 split. In January of 99, they did a 3-for-1 split. And then in September, they came up with another 2-to-1 split. Well, right after that, we hit 2000, and we hit the dot-com bubble, and Amazon lost 90% of its value. Yeah. And in 2000, it dropped from something like $90 a share to $10.82. Well, if you had bought Amazon in 2000 for what would it, $10,000, that $10,000 would now today be worth $3.2 million. So why I'm saying that is there is also rumor right now that they're going to split again. And why would they do that? Well, I think there's a large part of the investment population, a new part of the investment population, who looks at a $3,050, $3,500, $3,050, and say, that's just too big, too expensive a stock. I don't have $3,500 to spend on a stock. So they go away from Amazon. But the speculation is they will probably do a 30-to-1 split to a 50-to-1 split. Why would they want to do that? Well, first of all, the first thing that would happen is the Dow would pick them up as one of the Dow 30. Thus, every mutual fund or ETF that mirrors the Dow would have to buy Amazon stock. The other thing that it would do would be make it so much more affordable. The reason the Dow would pick it up is their formula will not allow them to buy a stock that is $3,000, and a 30-to-1 split would bring it down to about $114 and put it in the similar categories where it belongs, adjacent to Apple and Microsoft in the Dow. So I think it will happen. It didn't. A lot of people believed it was going to happen at this first quarter call when the new CEO was there to replace Jeff. But that would have just put too much on his plate on that first quarter call and introducing himself and whatever. So I suspect it when they have their next quarter call, we're going to see a 30 to 51 split in Amazon. That, again, is going to open it up to a whole new retail investor category that will follow my lead and other people's leads and say, this is a company you need to buy. If the investment gods come to you and say you can only own 6 stocks, this is one of them that you really need to make sure you own. So that's where I'm going. My premise is the gods say, Kerry, you've got $1 million. You can buy 6 companies and you can hold them for 10 years. And then you're out of the stock market. So what I'm going to do is, first of all, you need to catch the investment committee's stock review later this afternoon. and you'll see what they say about Amazon. And then you need to come back every Thursday, and then I'll tell you what my second, third, fourth, fifth, and sixth stocks are in the subsequential Thursday videos. Okay, I hope that's helpful. I hope you own Amazon and continue to own Amazon, because they are going to take you into the future, wherever the future should lead us.